Quick question. What's stopping you from investing? It's not picking stocks. It is not understanding the market. It is taking the first step. Because right now, investing feels like this giant, complicated thing. It's like you need a finance degree just to get started. But here's the truth. The first step is actually the simplest part. And by the end of this video, you're going to know exactly where to put your first dollar. Here's why most people never start investing. It is not because they don't have enough money, and it is because that they're scared. Every time they open their phone, they see market crashes, people losing everything, so they freeze. So let's fix that. Starting today, you only need 3 simple steps to become an investor. Step 1. Open the right account. Most beginners think that their bank account is enough. Saving protects your money. Investing grows it. A brokerage account lets you buy investments like stocks and ETFs. And the best part about it is opening one usually takes less than 10 minutes. Some of the biggest and most trusted brokerage firms are Vanguard, Fidelity, and Charles Schwab. They all let you invest in the same market. Do not waste weeks choosing a broker. Just pick one and get started. Once your account is open, comes the easiest part. Now that your account is open, what do you actually buy? Thousands of choices. Ignore almost all of them. Buy an S&P 500 index fund. One purchase owns a tiny piece of the 500 biggest companies in America. When the overall market goes up, your money goes up. And why do you buy an index fund instead of picking stocks? Because even professional fund managers, 90% of them fail to beat the S&P 500. These people do this 60 hours a week. If the professionals cannot do it, don't try to be smarter than the market and just own the whole market. Step 3 is the strategy. Most beginners try to time the market. They wait for the perfect time. But here's what actually happens. People buy high and they sell low. There is a better way. Invest the same amount every month, $100 every month. Not because the market is perfect, but because your system is. Here's why this strategy works. Sometimes prices are high, and sometimes prices fall. The same $100 buys you more shares. Over time, it averages out. You stop guessing. You start following a system. And that's what builds wealth. Now let's put the real numbers behind it. What can $100 every month really become? If you invest $100 every month starting at the age of 25, and the market returns around 10% every year, you could end up with a round of $632,000. But here's the crazy part. You only invested $48,000 yourself. The rest came from compound growth. The market worked while you slept. But wait until the age of 35. Same $100 invested every month. That 10-year delay cost you over $400,000. So here's your homework. Open a brokerage account, buy an S&P 500 fund, and set up an automatic investing. The amount matters less than the consistency. Trust me, your future you is going to thank you. If this helped you understand investing, then help someone else understand it too. Knowledge is only valuable if you use it. So before you leave, tell me one thing. What's your first investment going to be? Keep building your wealth, subscribe, and I'll see you in the next one.